Good morning. I will be discussing today only about adjusting entries, how to prepare the adjusting entries. But the remaining topics for Module 4 will be about accounting cycle number 5 to 10. Accrual basis. Under accrual basis, the effects of transactions and other events are recognized when they occur and not as cash is received or paid. I think I have already discussed with you the difference between accrual basis and the cash basis accounting. Here we will be now tackling in details how to prepare the adjusting entries. What's important, class? We will be since we will be discussing about, or most of the accounting application would be on accrual basis, not really on cash basis. Then we will be discussed thoroughly. We will discuss thoroughly how to prepare this adjusting entries. Why is there a need for an adjustment? Accountants make adjusting entries to reflect in the accounts information on economic activities that have occurred that have not yet been recorded. Although there are some actually has been recorded, but we have to prepare also adjusting entries. Adjusting entries assign revenues to period in which they are earned and expenses to the period in which they are incurred. These entries are needed to measure properly the profit for the period and to bring related assets and liability accounts to correct balances for financial statements. In short, excuse me, in short, adjustments are needed to ensure that the recognition and derecognition principles are followed, thus resulting to financial statements reporting the effects of all transactions at the end of the period. Adjusting entries involve changing account balances at the end of the period from what is current balance of the account to what is the correct balance for proper financial reporting. Without adjusting entries, the financial statements may not fairly show the solvency of the entity in the balance sheet and the profitability in the income statement. Okay. I have already discussed to you the difference between deferrals and accruals actually before, but then let's take it here thoroughly. Accountants use adjusting entries to apply accrual accounting to transactions that cover more than one accounting period. There are two general types of adjustments made at the end of the accounting period. These are deferrals and accruals. Each adjusting entry affects a balance sheet. Take note, class, no, this is very important, that each adjusting entry affects a balance sheet account, an asset or a liability account, and an income statement account. It's either income or expense account. So, buti pa sa bot class, you have to take note ng isa ba sa adjusting entry requires, no, this a deferral or accrual, that there will be an adjustment on asset or liability account, and the other account would affect, of course, the income or expense account. No? Deferral is the postponement of the recognition of an expense already paid but not yet incurred, or of revenue already collected but not yet earned. This adjustment deals with within an amount already recorded in the balance sheet account. The entry, in effect, decreases the balance sheet account and increases the income statement account. So deferrals would be needed in two cases. An example in a class, the very common that we have already prepared, is the recognition or the entries for prepaid insurance, no? For the insurance that we acquired, that I said for purposes of discussion in accounting, one would be recognized as prepaid. No, it would not be recognized as directly recognized as an expense. Like also another example would be supplies, the acquisition of supplies. Diba, for purposes of discussion, for companies that buys in bulk, magpundo, hamok stock na paliton ng supplies, would be recognizing initially the purchased supplies to supplies, which is an asset account. And then eventually, at the end, when we prepare the adjusting entry, we have to recognize the supplies expense account, when they are already consumed or used. And another example na sa prepaid or sa deferral would be the recognition also or the entries for the asset accounts like mga building, furniture and fixtures, machinery. Actually, they are prepared, they are asset account, but we have to recognize the depreciation expense. That is the adjusting entry that we're going to prepare at the end of an accounting period. So deferrals would be needed in two cases: allocating assets to expense to reflect expenses incurred during the accounting period. So ito na ko example of prepaid insurance, supplies, and depreciation. And allocating revenues received in advance to reflect revenues earned during the accounting period. Aton gani remember that kung makadawat na ka aton sa example na wedding are us aton sa previous example nan aton journal entry that there was advanced consultation that was made, and then with the proper accounting entry would be recognizing it as a debit to cash and a credit to a liability account, which is an earned revenue account. So to earn this, kinahanglan the lapse of time will be the proper venue for you to recognize the revenue, dili na kon liability. So that is an example. Accrual. So ako ni this is actually ito sa mga utilities expense. So remember na kung magbayad ng kurente sa Sorneco, di ba? Magamit ani kita kuman, and then sa sunod na ang buyan na ang bayad. So this is accrual, So it's the recognition of an expense already incurred. Na-incurred naman nato ang Sorneco, paggamit sa ato water and electric bill, but di pa nato kabayari. They will bill us, or send the statement account for us to pay the bill, for the corresponding previous month consumption. Mainit class. An expense already incurred but unpaid, or revenue already earned but uncollected. So kung revenue ang revenue collected na, aton sa deferral aton sa revenue na deferral aton sa taas, So here sa accrual on the part of Sorneco, it is a revenue already earned but not yet collected. On the part of the consumer, aton mga membro ng Sorneco, it is an expense already incurred but unpaid, This adjustment deals with an amount unrecorded in any account. So waya gud din sa ma-record. Unlike sa deferral, advanced recording na, recognized as an asset or a liability. And then we just prepare the adjusting entry to recognize the expense for the asset account and recognize revenue for the liability account sa deferral. But for the accrual, we initially no recognition was made kay unpaid man or uncollected man. But in this adjusting entry that we have to prepare, dapat i-recognize na nato ang expense and i-recognize na nato ang income na uncollected. Okay. Allocating assets to expense. Entities often make expenditures that benefit more than one period. These expenditures are generally debited to an asset account. At the end of an accounting period, the estimated amount that has expired during the period or that has been benefited, the period is transferred from the asset account to an expense account. So matagtaglaong kainan, no? Two of the more important kinds of adjustments are prepaid expenses and depreciation of property and equipment. Okay, class, Klaw na kuya ko ka-record. Prepaid expenses. So some expenses are customarily paid in advance. These expenditures, example supplies, in rent, no prepaid rent, and insurance, prepaid insurance, are called prepaid expenses. Prepaid expenses are assets, not expenses. At the end of an accounting period, a portion or all of these prepayments may have expired. The portion of an asset that has expired becomes an expense. Prepaid expenses expire either with the passage of time or through the use or consumption. The flow of cost from the balance sheet to the income stated is illustrated below. Diyan na nakibali na asset na si Ja, and then when we prepare, or liability na si Ja, but when we prepare already the adjustment, mahimo na si Ja diri sa. It's either an income already or an expense. If adjustments for prepaid expenses are not made at the end of the period, both the balance sheet and the income statement will be misstated. No? First, the assets of the entity will be overstated, no? Because dapat ma-reduce na to because of the adjusting entry to be made. Since waya, so overstated pa siya. Second, the expenses of the company will be understated, no? Because waya ka maka-reduce ng asset. Of course, di ba remember that the adjusting entry for deferral will increase or will reduce asset or liability account, and it will increase either income or expense. Di ba laong, no? That the deferral adjusting entry will require an asset and an asset or liability or an income or an expense. For deferral, it will decrease, no? For deferral, it will decrease income or it will decrease asset or liability account. Kaya mo may ato ko ano, ato imo na adjusting entry, and the income or the expense will increase, no, sa deferral. Okay. Second, the expenses of the company will be understated. For this reason, owner's equity in the balance sheet and profit in the income statement will both be overstated. Okay. Sabi na kung expense, no? Overstated ang income kay, wala man ma-minus ako ng expense. Kung income subsidy, ma-understated. No? Kung, for example, if we fail to recognize adjusting entry for an earned income, no? So, kita maka-recognize ng income, meaning to say, the income statement is understated. Kung kita maka-adjust ng an earned revenue. Okay, prepaid rent, no? I have here an example. Actually, this is from the book. So you have there that on May 1, weddings are asked, paid 8,000 for 2 months rent in advance. This expenditure resulted in an asset consisting of the right to occupy the office for 2 months. Prepaid, no? A portion of the asset expires and becomes expense each day. By May 31, one half of the asset has been, kaya di ba 2 months man, one half kay isa na makabuyan and expired and should be treated as an expense. The analysis of this economic event is shown below. You have transaction, expiration of 1 month's rent, assets decreased, di ba remember? and owner's equity or income prepaid rent or expense is increased. That's why owner's equity is decreased. The rule is decreases in assets are recorded by credits, decreases in owner's equity are recorded by debits. So entries, you have to debit o diretso na kantano. I will no longer read for you the rules and the entries diretso ta sa entries, no? Debit to rent expense again, no? When you prepare the adjusting entries, do not write the DR, CR there. Diretso lang sa mga OE and E because it is only an specification that what are the accounts affected, no? Or what is it, no? Is it accounts classification, I mean. You have there the rent expense is classified as an owner's equity and it is an expense account. That's why in this case, owner's equity is decreased while the prepaid rent, which is an asset, is decreased. Diba? Based on the analysis here, that assets decrease and owner's equity is decreased. After adjustments, the prepaid rent has a balance of 4,000. Siyempre, kaya itong 8,000 man si Johnny is at prepaid. So after the preparation of the adjusting entries, kaya nag-credit man kita ng prepaid rent, nahimura ka ng 4,000. Okay, next, the prepaid insurance. Prepaid insurance, no? So you have there, weddings are asked, acquired a 1-year comprehensive insurance policy on the service vehicle and paid 14,400 premiums. So the premium is the payment that you pay for an insurance policy. So transaction expiration of 1 month's insurance, and the analysis is assets decreased and owner's equity decreased. Now remember, the weddings are asked are actually are the continuation on the preparation of the adjusting entries. Here is the continuation of the journal entries that I have given you also as an example that I also have discussed to you in the preparation of the journal entries. So assets increase, owner's equity increase because pareho ra gyapon sa prepaid rent, no, na mag-recognize gyapon kita ng expense and to decrease the prepaid insurance, which is an asset account. So you have there the entry is debit to insurance expense, which is also an owner's equity account, and it is classified as an expense. Oh, and then credit to prepaid insurance for 1,200. Again, the prepaid insurance is classified as an asset account, no? Initially. The prepaid insurance account has a balance of 13,200. Aton 14,000 less 1,200. Why also 1,200 class? Okay. I will show to you here kung tag-uno. I will prepare an Excel. Okay. Remember that the insurance policy remember the amount of the insurance policy is 14,400. So the expired portion is only for the 1 month. So expired portion is equals to 1 month. no? Okay, amo may taghatag sa example. But if, for example, it is the end of the period class, then we have to count, no? For example, kung December 31, then from May 1 to December 31 is how many months, no? That is the expired portion. So you have there 1 month. So kung ato subayon, the solution or the computation for that, hagok man ako cut. Allah, hagok man ako cut. Allah. So you have there 14,400. Uy, hagok man ka long. Alalong, hagok man ikaw. So 14,400. Diba remember, for purposes of discussion and accounting, the insurance policy is good for 1 year, not unless it is stated or defined in the problem, okay? Or specified as specified in the problem. But if the problem is silent, no, you have to take note that for purposes of discussion, the insurance policy or the prepaid insurance should be good for 1 year or 12 months. So divided by 12 months. Okay. So pila, 14,400 divided by 12 is equals to 1,200 per month ang i-adjusting entry. So again, balik ko na ko class, no? Ang lamang example din sa problem class is only 1 month, no? Nag 1 month ra si Jan, naghimo sa na adjusting entries. But in actual, for example, okay ra kung December ka, tapos calendar, you started your business on December, or any day in December, or December, let's say December 1, and then your end of an accounting period is also December 31. If you chose to opt to use the end of accounting period a calendar year. So kung calendar year, so December 31 on the same year, no? So 1 month na siya. But then, for example, kung May 1, usually called class, the adjusting entries, take note class, that the adjusting entries are not really made on the monthly basis, not unless the business uses computerized accounting system that the system will generate automatically the adjusting entries. And if they prepare financial statements on a monthly basis, then you need to prepare the adjusting entries also on the monthly basis. But then kung waya, no, kung dili, manual ka mo, then you prepare the adjusting entries on a yearly basis, no? That as I've said, it is always prepared at the end of an accounting period. Okay, inilalaman na example 1 month lang ni Isatagat. But then later on, I will also show you an example of an adjusting entry for a year, no? So 1,200 per month. So meaning to say, since we only prepare for 1 month, no, for the month of May, so the adjusting entry amount would be 1,200. There, class. Loh, nagkagukmang gajud ako kat, alo. The prepaid insurance, prepaid insurance is a balance of 13,200. Why? 14,200, no, minus 1,200, it would give you 13,200. Okay, supplies, no? Supplies, of course, dili ko siya ko na specific month, no? It's not fixed, no? As to each month, no, kibali divide nato na 12, no. Siyempre ang supplies would be the basis of the adjusting entries will be kung pilay nagamit, no, consumed, no, or used, no, for the period. So granting, no, kung at the end of the accounting period, Perez Manalo makes a careful physical inventory, kinalaman physical inventory, no, of the supplies before you would be able to determine how much would be was used or consumed. The inventory count showed that supplies costing 15,000 are still on hand. This transaction is analyzed and recorded as follows. So remember, dire, on May 8, nag-purchase sila ng supplies worth 18,000. But at the end of the month of May, 15,000 na kanabilin. So what would give you? O maihatag niya based on the information, it would give you pilay amount of supplies that was nagamit or used, no? So gikan sa 18,000 ang nabili na kang 15,000. So meaning to say that 3,000 amount of supplies was already consumed or used. So consumption of supplies, then a transaction is the consumption of supplies. Analysis, again, pareho rin sa mga prepaid, no? Debit to assets decrease. Assets are decreased and owner's equity is also decreased in the form of expense. So the entry is debit to supplies, expense, and credit to the asset account, which is supplies for 3,000. So I will just show to you, no, again, another solution so that, because I usually require when you are asked, no, in the assignment, that all adjusting entries should really be prepared with a solution. Okay. You have there supplies purchased, diba, 18,000, and then supplies inventory, pila pa? 15,000 kanina, di ba? Again, this is just to show you how to compute for the supplies, no, expense account. So you have there, diba, remember that supplies is 18,000 minus 3,000, so the balance is 15,000 at the end of an accounting period, no? Or at the end of May for this problem. Diba, remember, 18,000 man initial recognition, and then we prepared an adjusting entry for 3,000. Then, ang nabilin is 15,000. Okay, depreciation of property. Actually, human kita ini no, nag-discuss. We even discussed aton accumulated depreciation. Aton, remember that depreciation is equals to the cost of the asset minus salvage value, if any, and then divided by the life of the asset. So we have been discussing this one already. So formally, let's take it up. So this is how, no, this is the solution on how to prepare for the depreciation expense. Actually, as I've said, nahuman na kita dyan, no? Remember that the difference, no, between the cost of the asset minus the accumulated depreciation, if we may recall, it is equals to the net book value or just simply book value, no? Pwede ra. Okay, service vehicle. You have there, and service vehicle ko was acquired for 420,000. And then there was a salvage value, I think, na 84,000. Was it given? Dyan. The salvage value here, as given in the problem, is 84,000. And then, pilam sa inika months. 84 months ko, no? will last for 84 months or pila man dyan 84 months. Sige na kung if you have to in number of years, kung 84, 60 is 5 years, 72 is 6 years, so 7 years, no? 84 is 7 years. So, pwede ra, no? Ini-isa kay months man, no? But for purposes of discussion nga pat class, dapat dili kon months, no? Dapat year, no? Amo may kasagaran na jud. Example. And then we translate it, of course, to months, especially if we are computing for a fiscal year. Okay. I naman ko kadali ang class. I will just change the amount here. Okay, these amounts represent the cost allocated to the month, thus reducing the asset accounts and increasing the expense accounts. So transaction is recording the depreciation expense. So debit to the depreciation expense, you have to specify, no? Kung isa ra ka asset account class, no, aton mga depreciable asset for a business, pwede ra dili na butangan ng dash what is the asset account. But if it has multiple depreciable asset, aton mga assets na subject to depreciation, among depreciable assets, so you have to specify, or after the depreciation expense title, dash or hyphen service vehicle dapat, no? Or sa next entry, which is office equipment. The accumulated also depreciation should be specified also for what is that asset for, okay? So sa service vehicle, ano man na to is a service vehicle. And deliver that on office equipment. So the office equipment that was acquired on May 5 will have a useful life of 5 years or 60 months. Okay, so YIE just salvage value. So amo ini, there is a service vehicle for 20 minus 84, then divided by 84 months. And there office equipment 60, the acquisition cost is 60,000. No salvage value, so nothing to deduct, no? And then divided by 60 months, which is equivalent for 5 years in months. So amo dyan, we have two. Since we have two depreciable assets, and we should also have two adjusting entries. Actually, we can prepare a compound entry, but of course, amo ra gihapon, no, dili siya karadyaw kun ma-save ang time, no, because there would also be two depreciation expense account, bisan compound, and two accumulated depreciation, even if it is compound. Okay, for depreciation only. Take note, class, no, the adjusting entry is the adjusting entry adjustment explanation, no, should specify to recognize for accrual, no, and then to prepare the adjusting entry or to adjust, no, pwede na to adjust or to record the adjusting entry on laong anak siya, no, for the explanation. But I have example now below on how would be the explanation be written. Okay, for example ko, no, this is the as the balance sheet, no, how they are shown at the end of an accounting period. You say for the month of May, aton asset na service vehicle na 420. So dapat mag-less accumulated depreciation, and then the 416,000 would be your net book value. And for office equipment, aton 1,000 manage depreciation. Remember, no, aton accumulated depreciation is the sum of all depreciation charges, no? So since we only have 1 year, that's why the accumulated depreciation 1 month. So we only have 4,000 and 1,000 as accumulated depreciation for the respective asset accounts. Okay, allocating revenues received in advance. So these are now, we will be taking up already deferrals. Actually, we are discussing already deferrals, no? But in first part was about an asset that are recognized eventually as an expense. And here would be an liability initially recognized as liability, and we are now going to record it as an income account. So for example, kuno, publishing companies usually receive payments for magazine subscriptions in advance. These payments must be recorded in a liability account. If the company fails to deliver the magazines for the subscription period, subscribers are entitled to a refund. As the company delivers each issue of the magazine, it earns a part of the advance payment. So this earned portion must be transferred from the unearned subscription revenues account to the subscription revenues account. So anak siya. So from liabilities to income or revenue. Kanina, itong deferrals on asset, no? So that they are recognized initially as an asset, then eventually they would also be recognized as an expense. So itong referral revenue, so on May 15, weddings are as received 10,000 as an advance payment for referrals made. Assume that by the end of the month, one of the three couples referred has already taken their marriage vows, and as a result, the amount of 4,000 pertaining to the referred event has been realized. This transaction is analyzed as follows. So the transaction is the recognition of an expense where cash is received in advance. As an income, recognition of income where cash is received in advance. So analysis, liabilities here will decrease and owner's equity will increase. So the entry would be debit to unearned referral revenues at an initial recognition sa journal entries na example. Then for 4,000 and the referral revenues for 4,000. So the liability account, unearned referral revenue reflects the referral revenue still to be earned. The referral revenues account reflects the amount of referrals already completed and considered as revenues during the month. So inira lamang, why no need for computation kay kung given daan an amount, no? Kaya naglaong man ng 4,000 naman gadjud kuno aton. But later on, there will be example that there are fixed actually like advance payment for let's say to be performed for 3 months that was already collected in advance. No, ana siya. Then you have to multiply it by a certain period. Okay, next. Adjustment for accruals. So this is actually the step number 5, no? Adjustment for deferrals is also step number 5 for the accounting cycle. So accrued expenses are those expenses that are already incurred but not yet paid, no? So buti pa sabot, we have to recognize the adjusting entry will require, no? The adjusting entry for accrual will require an increase in income or expense and an increase in asset or a liability. Okay. So entities pay their employees at the regular intervals. It can be weekly, semi-monthly, or monthly. So salaries na ito is accrued, no? Weekly payrolls are usually made on Fridays for a 5-day work week or Saturdays for a 6-day work week. Weddings are as pay salaries every 2 Saturdays. Assume that the calendar may appear as follows. Okay, bali amora ini tag-assume ra nato ini na kalendaryo, no? This is not for 2021. Kaya basin masaya ka mo. Okay. So the office assistant and the account executive were paid salaries on May 13 and 27. So okay, every 2 weeks man si Jan, no? Kung weekly, then dapat at the end of kumali on Saturdays, magbayad na. Kung ang nila weekend is only on a Friday or ang duty nila would only end on a Friday, then dapat magsweldo na kada Friday. Okay? And at month end, employees have worked for 3 days, no, May 29 and 31. Oh, di ba remember? Ganito. Kung nagba every 2 weeks, di ba, dari na dire. Of course, bayad na si Ja sa aton 13, no? Bayad na si Ja sa May 13. Sa 27, bayad na sa siya class. So there's no accrued salaries there, no? Or accrued expense to be recognized. But remember that we have to recognize salaries, no, at the end of the month. So dapat remember ang sweldo pa niya sa sunod ari pa diri sa buyanan Hunyo, no? Aton ikaduha na semana diri sa na Saturday sa Hunyo. So that would be, ano ka dyan na pizza? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Pizza G's pa ang sunod na sweldo. But the end of the month is already on May 31. So dapat the accrued expense class should be for May 29, no, to May 31. Ako ini-specify class. So in yellow, no, that is the accrued expense. Kung ang ato preparation of financial statement or adjusting entry would be at the end of the month of May or May 31. So again, uman accrued man si Ja, kaya pa man siya mabayari, no? Bayaran si Ja ato pa man sa pizza G's nan Hunyo. So accrued, no? That is your accrued salaries for 3 days. The employees have earned the salary for these days, but it is not yet due, no? It is not yet due to be paid until the regular payday in April. April man. Dili, June. Diba? Kay May man ato calendar. Okay. The salary for these 3 days is rightfully an expense for May. And the liability should reflect that the entity owes the employees for those days, no? Siyempre, pero of course, si employee ito kay bayo na bayro nan company sa ija. Each of the employees' salary rate, for example, is 7,800 per month or 300 per day, no? Or 26 working days. The expense to be accrued is 1,800. How? 300 times 3 days times 2 employees. This accrued expense can be analyzed as shown. Accrual of unrecorded expense. So okay ra ini kung monthly si Jan, no? Kung monthly ang ija ginabayad ang ija salary. But sometimes kung mga daily, no, it would now differ, no? The solution would differ if what is the pay period of the business or the company. So analysis, liabilities increased and owner's equity decreased. Increase dapat buing. Oo, decrease ba kay? Sorry, kay expense man ang tag-recognize. Sorry, kay expense pa man si Jakas. Liability increase and owner's equity decrease. Okay. So the adjusting entry for the accrued salaries would be debit to salaries expense. No, kaya pa man si Jack, of course, that is for the expense account for the salaries, and credit to salaries payable. Kaya meron nun pa man si on June 10 for 1,800. Okay, accrued interest. On May 2, Perez Manalo borrowed 210,000 from Metro Bank. She issued a promissory note that carried a 20% interest per annum. Both the interest and principal will be payable in 1 year. So take note, no? It always depends on when is the maturity date of the note or the borrowings. The note issued to the bank accrues interest at 20% annually. At the end of May, Perez Manalo owed the bank for 3,500. So, dyan ang computation sa ubos. Okay. For interest in addition to the 210,000 loan. Interest is a charge for the use of money over time. Interest expense is matched to a particular period during the benefit the use of the borrowed money is received. The interest is a fixed obligation accrues regardless of the results of the entity's operation. Bisan palugi, basta kung obligasyon, bayaran na siya. Interest rates are expressed at an annual rates, no? So if interest is being calculated for less than a year, the calculation expressed time as a portion of the year. Thus the interest expense simple interest raan ato formula incurred in this note during the month is determined by the following formula. So ito PRT, no? Yeah. So PRT, principal, rate, and interest, and time, I mean. So that is principal times interest times time. Okay? So 210 times 20% per year times 1 over 12. Why? Kay good for 1 month naman nato tag computan, no? Remember that the example here is only good for 1 month. So we have the accrued interest for 3,500. So the entry would be a debit to interest expense and interest payable. Okay. Karos aman sa bayaran, remember you have to take note ng interest and principal would be payable in 1 year. But dapat it should be proper. So at the end of 1 year, no? So dapat bisan dili o yapay principal na payment, dapat we have to accrue in the books aton matching type that kung karon sa na period, kay sometimes if it crosses another accounting period, so dapat for the current period the interest expense should be recognized, no? Dili ma-appeal adton kanos asisa mo due. Okay, so next, accrued revenues. An entity may provide services during the period that are neither paid for by clients nor billed at the end of the period. The value of these services represents revenue earned by the entity. Any revenue that has been earned but not recorded during the accounting period calls for an adjusting entry that debit an asset account and credits an income account. So you have there, suppose that weddings are as agreed to arrange a rush, no? But simple civil wedding for a madly in love couple in the afternoon of May 31. The entity intended to charge fees of 5,300 for the services, which is earned but unbilled. This should be recognized or recorded as below. Debit to accounts receivable. Why accounts receivable? Siyempre kay kolektahonon pa man niya, asset man siya. Kanina liability, jari, kay because it is a liability on the part of weddings are us, no? Kay ilaman utang aton 210,000. Remember that attached to a liability or a loan obligation will be the payment of interest, no? When it is charged with interest. Okay, it is debit to receivable kay dawatonon pa man, and the increase in asset in income account, which is consulting revenues for 5,300. Okay. Uncollectible accounts, these are the adjusting entry, no, if the business opts to use uncollectible accounts or recognizes uncollectible accounts, no? So what is an uncollectible accounts? Adjusting entry for those accounts that are not yet collected, na tapos nag-past due na, no? Mga accounts, abot ng mga utang na accounts, ha? Remember, uncollectible accounts meaning to say, an imo mga utang na nimo customer na imo kabayari na imo sa i-age, no? Ay isa na ni katuig, ay duha na ni katuig, or whatever, no? So that is the aging of accounts receivable, and it is but proper that if you have a policy of recognizing this past due accounts, no, compiled percentage of expense, then you recognize. Remember, this is just temporary. This is not final, no? But just to adhere to the matching principle, that's why we have to prepare a expense, no? That eventually, manggod, if this accounts receivable would no longer be collected, dili na bugat sa IJO, sa company to recognize the entire amount as an expense because you have already recognized initially, no, for the past months or for the past years. So kung mag-close na kamo, kung for example, if you retire, you write off, if you write off this accounts receivable, then dili na karadyo bugat on the part, in the books, kapag recognized on the part of the company. So debit to uncollectible accounts expense and credit to allowance for uncollectible accounts. Now, this account is not really thoroughly discussed here, no? Sa IJO, no? Sa mga BSBA, so mga business administration students, because complex man siya, it is discussed thoroughly only for BSB, for accountancy. But for purposes of discussion, we will also take it up, no? Hinahinera lamang as it comes sa problem. Because most of the problems here, actually, class, mulaong na siya na 70% realizable. Buti pa sabot, out of the accounts receivable, no, na ijo kolekta honon, only 30% is dili na makolekta. So meaning to say, that would be the amount that you have to recognize as an expense. But later, no, we have to have an example. So the effects of omitting adjustments: when an accountant failed to include the proper adjustment entries, the resulting financial statements will not accurately reflect the financial position and the performance of the entity. Inaccuracies in one accounting period can cause further inaccuracies in the statements of the subsequent periods, no? But if it is recognized already, for example, makit-an ra, then it will be corrected. Okay, illustration on July 1, 2018, Kaboyang Manpower Services owned by Warlito Blanche, borrowed 100,000. Borrowed the 100,000. Awkward, some wrong grammar. By signing an 18-month, pasensya mga anak, month note at 16% interest per annum. The principal and interest are to be paid when the note matures on December 31. So as of December 31, the entity has incurred interest expense of 8,000. Okay, ini 1 year na, no? To kibali the end of an accounting period na. Kanina, monthly tat mga examples sa weddings are us. So the entity has incurred interest expense of 8,000. So how? 100,000 times 16% times 6/12. Remember, quoted interest would always be per annum or annual or for the year, no? Entire year. And then, no, ana siya. Then the accountant did not record adjustment for the accrued interest. The entity should have being a debit to interest expense and a credit to interest payable for 8,000. The effects of the omission in the 2018 financial statements. In the 2018 income statement, interest expense is understated by 8,000. Of course, kaya kita ma-recognize. Remember, when we say omission or omitted, waya nato ma-recognize or unrecorded siya. Okay? And therefore, profit is overstated. Kaya man mag-recognize an expense. In December 31, 2018, balance sheet owner's equity. The balance sheet owner's equity is overstated by 8,000 because of the overstatement in profit dito sa owner's equity and the overstatement of the balance sheet. Kay understatement of the balance sheet, kaya waya man ma-recognize aton payable, no? Aton interest payable. Okay, December 31, 2019, the maturity date. The note is paid, granting ko no if the note is paid together with interest. Since there was no adjusting entry made to accrue interest in 2018, the entire interest for 24,000, that is 100,000 times 16% times 18/12. Okay, what is the maturity? 1.5. Okay. Okay, July month is that 2018, so that's July 2018 to December 31, 2018 is 6 months, and for the entire year for 2019 is 12 months. That's why it is 18 months. Was erroneously charged against 2019 profit. The correct interest expense for 2019 should have only been 16,000. No? 100,000 times 16, pwede na times 1 for 1 year man siya class. No? The effects of the omissions in the 2019 financial statements are as follows. In the 2019 income statement, interest expense is overstated. No, sobrahan na ng 8,000. Kaya dapat atong 8,000 sa 2018 pa. And therefore, profit is understated by 8,000. The December 31 balance sheet is correctly stated since the note along with its interest has been settled by year end. So, amo na dyan correcting, no? Correcting errors, no? So, when it is already discovered in the year, na-correct na siya. No? Bisan waya siya ma-recognize in the year 2018. The effect of the omission has been counterbalanced by the end of the second accounting period. In summary, the omission has produced 2 erroneous income statements and 1 erroneous balance sheet. If the entry should have reported a correct profit of 500,000 in 2018 and 2019 statements. As a result of omission, the proprietor's profit in 2018 is 508. And in 2019, 492. Kaya nasobrahan man siya ng 8,000. Adjusting entry using the T accounts, no? Pero I don't want, actually, this is a simpler one. But since we are going to take up already or to use general ledger, so ala. My God, di pa gadget mo. Okay, a class, let me review. Okay, so to illustrate, not on using the analysis of the adjusting entries using the accounts, Ecotors established by Galicano Del Mondo at the start of the month reported at month end the following related accounts and account balances. So you have their supplies, 36,000, and supplies expense of 15,400. Looking at the foregoing, Del Mondo wants to know how much cash was paid out of the purchase to purchase supplies. Start by placing the relevant information in a T account. Input the beginning balance and the normal balance of the account. In this case, supplies is debit. There is nothing beginning. Okay. There's no beginning balance since the company just started operations this month. As a technique, the ending balance of the account here, supplies for 36,600. 36,000 na, mga sakto. Sige, 36,600 ba daw sa class? Okay, 36,600 is placed opposite to its normal balance. Kaya amo may kay balance, no? Amo may taglaw to supplies inventory, no? And then in adjusting for the supplies expense, the entry made was debit to supplies expense for 15,400 and credit to supplies for 15,400. Kung amo dyan ang expense account for the period. Total both debit and credit sides. The cash paid out for supplies can now be derived. It's 52,000. 52,000 minus 0. The plug figure, if there was beginning balance of 2,000, then cash paid out would have been 50,000. So ano man diyan, tag-uno ko na siya. So the ending balance of 36,000 tapos expense is 15,400. So buti pa sabot an IJA debit or purchases of supplies that was paid in cash was for 52,000. If there is a beginning balance there, so minus the beginning balance would be your figure for the purchases for the period of supplies. Ana siya class, no? And then assume instead that the 36,600 ending balance for supplies and the 52,000 cash paid for supplies were given using the T account. Supplies expense is 15,400 or 52,000 minus 36,600 or given in this is 52,000. Sorry class. And then and at an ending balance 36, so the difference it would be your expense, not to 15,400. To illustrate further, a company reported at month end the following related accounts and account balances. You have the prepaid insurance end 67,000, insurance expense for 12,000, and prepaid insurance beginning for 48,000. And how much cash was used to pay the insurance this period? So you have the answer there is 31,000. Why? Ang beginning i-plot, and then the expense is you plot it also for 12,000. The ending balance should be on the opposite side. Remember, because that's the balance. And the plug figure would be the difference for the debit and credit columns. Okay? So to have an ending balance of 67, there must have been a 31,000 debit for or to the prepaid insurance account. Since a debit to this account is normally offset by a credit to cash, the analysis confirms that cash outflows for insurance was 31,000. So you have here the summary of adjusting entries for purposes of discussion class. The adjusting entries, the adjusting entries in this problem would only be prepaid expenses, and earned. I mean, actually there are two methods, the income method and the expense method. But what we are going to recognize here would be only the asset and expense method, Basta, we will be using the simpler, method, We will not use that for the accountancy students. But of course, if it would be given in the problem, I should have taken it in a discussion with you. Pero kung waya, so dili, Kaya mas malibog na hinuong ka mo. Libog na gani daan siya, then ato pagamiton aton expense method for asset method. I mean, dapat ano pa ni class, the most common method used is actually the asset method and the liability method. Asset method for prepaid expenses and liability method for an earned account. But of course, for accrued expenses, there is no excuse, It's always accrual, that is to be used. There is no method there to be applied. So kung expense and an income method class, mas listen. But then you just take note of this one, so what our entries are to be recorded. And then for purposes of discussion here with you in BE1, I will not take it up with you. Okay, as I've said, it is really complex in discussion. Ini amoy niyaton what if kung expense method, So kung asset method, amo ton ato usual entry na ato taghimo na debit to prepaid insurance sa credit to cash. Pero kung expense method class, amo ini debit to insurance expense instead of the asset na prepaid insurance, ang credit to cash. So, kung expense method class, your adjusting entry should recognize the asset. So, dapat mag-debit ko ng prepaid insurance and the credit to insurance expense, no? Nabali na hinoon. Uksa, I will not take it up with you kay mas maglisod na hinoon ka mo. Di ba 36,600 ato class? Oh. Sige na lamang. So at the end of the year, adjusting entries needed to establish the proper balances in the prepaid insurance. So, matok taglaong. So dapat, kung adjusting entry, dili sa asset method, amo ini, debit to insurance expense and credit to prepaid insurance, the one that I discussed earlier. Pero kung expense method, ang tagamit, ang nato adjusting entry is to recognize the prepaid insurance, kaya dapat, daw magajoy. Di man pwede itong expense, no, na modako. Okay, because only at the end of the year, ang expense nato na for the period should only be the amount to be recognized. And then credit to insurance expense, no, 33,000 because out of the 36, only 3,000 is expense. Diyan ga ang proper accounting. Pareho proper pero mas komplikado ang asset expense method or the income method. So there is kon liability aton debit to cash, aton unearned revenue, aton advances na na-receive nimo. But for revenue method or income method, debit to cash, credit doesn't to revenue, no? But at the end of the period, ay mo adjusting entry, debit to rent revenues and credit to unearned rent revenues. No, dapat the liability account at the end of the period should really be properly disclosed or recorded at the end of the accounting period. So I have the YouTube channel for your references. YouTube links, I mean class, for your references, arang ini kahamok, no? You may read this one, no? And I also, as I've said, this is also recorded in my YouTube channel. So this is another example of adjusting entries, no? For you to read, no? I have also examples here for you to read. Ini class, ini na problem arang kalisod, so you should and lisod na ako taghatag sa Ejo para mas makasabot pa sa tanan. So dari na sa the adjusting entries for Nick Marasigan is also shown here. As I've said, for Nick Marasigan and a wedding are as good class, kuto bra siya sa adjusting entries, waya na dadun sa financial statements, pero I don't know kung I don't know. Hindi ako sure. Basta kay for Nick Marasigan, complete cycle from step number 1 to step number 10 will be shown here. So I have also example here, an explanation, how to write your explanation, which is very important. Now, because the examples above from the book are not, no explanation has been written. It's always to recognize for accrual, no? I mean, for deferral and accrual is always to recognize. Dito sa class, sa journal entries, the preparation of the journal entries, diba, remember, general journal entries. Remember that the explanation would always, the initial recognition, no, would be stated to record, ana siya dapat. But then, sa ako example sa Ejo, I go directly, di na ako gamit to record, no? Kay pareho ra, no? Taas-taas ra lamang sa explanation. That's it, no? For the adjusting entries account, I will activate a quiz on what I have discussed here. And also, I will give an assignment also for this one. Okay. But since, okay, that's it for today. Thank you for joining my class.